Time for Cash Tags. I'm Alex Coffey filling in for your co-host Tom White, joined as always here by Kevin Hinks, getting the band back together here on a Friday. You're watching Fast Market here on the TD Ameritrade Network. We'd now like to welcome in our guest, the co-founder of LikeFolio.com. Mr. Landon Swan is joining us. Good morning to you, Landon, or I guess afternoon out in Florida. So thanks as always for taking the time and joining us here. Long time no see. Let's talk some sports gaming. We have two big names within this space that have been under pressure recently, but catching a little bit of a bid today, at least in one of them.
Yeah, so PENN and DraftKings are the two I think we're going to talk about today. And these are actually two companies that LikeFolio has been bullish on for quite a while. So we put out a bullish alert on PENN middle of June and a bullish alert on DraftKings in the middle of July. And so we're actually down a little bit on PENN since then, mostly because of this earnings move or I guess the allegations move as well. You got a lot of heat coming on Portnoy right now. But what we're seeing is a nice rebound today. And I think it's interesting to see what's happening with all the the news that's going on. You've got earnings that, while they increased revenue, I think 33% year over year. PENN National Gaming to 1.5 billion. The pace, I think, slowed down. We were actually very slightly bearish on them on the earnings report, mostly neutral, but long-term bullish. So this pullback is kind of seen as an opportunity for us. Also, I think that just based on the reaction that we've seen so far on the whole Portnoy scandal, it looks like he's handling it pretty well, and the happiness for the company has really not moved at all. So we're not seeing a lot of blowback so far, and I think that it could go away. Just that's speculation, obviously. But this looks like a good buying opportunity, in my opinion, for PENN. And then for DraftKings, they have, obviously, they're a smaller company. They don't have all the casinos and racetracks. But they do have a larger share of online sports betting, and so they've done well again year over year, but maybe not as much as the industry had wanted. We were fairly bearish on them going into this report, even though we're long-term bullish. Sometimes we do that. Sometimes we shift around on earnings reports. So again, this is a potential buying opportunity for DraftKings as well. Overall, though, if you look at just sports betting in general, it's doing well. It's up about, I think, 10% year over year, 9 or 10% year over year, the mentions of people talking about betting on sports. And that is going into a very heavy sports betting season, right? So you've got, baseball just ended, but basketball's ramping up, football's right in the middle. It usually peaks around Super Bowl, so first week of February or so, but it's already up plus 9 or 10% year over year. So these companies are set up to do well, capturing those mentions. And as you can see here, people talking about the Barstool specific sports book is up 44% year over year. Very strong numbers out of them. So they've got more members engaging, a younger audience doing really well with this. This is obviously good for PENN, even though they don't, this is a small part of their portfolio. But if you want to invest in Barstool, that's the ticker to invest in.
Landon, we're not going to go near the cancel culture and how it can affect stocks and people and businesses, but we certainly want to look at these companies, right, and how they compare to each other. And what we need to know, what I need to know when I talk to LikeFolio is, when let's just focus on two. Let's talk about PENN National Gaming and DraftKings. Which one of them is the Home Depot and which one of them is the Lowe's, right? Which one of them is the clear leader and which one is the competition? Or are they both? Are they two equals? Are they both fighting? And is competition between these two, do they have their own lanes, or are they really trying to eat each other here?
So it's tough. So I think the DraftKings, when it comes to just betting on sports and keeping it very narrow in that mindset, I think DraftKings is the leader. And I think that PENN with Barstool is the, sort of the underdog coming through. But PENN is so much bigger because they've got all the casinos and sportsbooks. So it's kind of, casinos and racetracks. So it's kind of hard to compare them in that regard. I think that generally speaking, if you just talk about overall gambling, obviously PENN is much, much larger. And I think that DraftKings is coming for a segment of their business. But if you talk about just sports betting, DraftKings is larger, and PENN with Barstool is coming for a segment of theirs. So it's kind of an interesting dynamic when you look at it like that. And if you talk about sports betting, it's only legal right now in 19 states. And so there's a lot of room for growth. And the fact that the mentions are already higher at this point than they were last year, even though like it's, we're just getting back into things, but last year we were here. So I think that even if you look at DraftKings purchase intent, it's not as strong as what Barstool Sportsbook was doing, but it's still on a nice trajectory. And you have to remember, like, this is when you talk about casinos and sports books, this is printing money. It is basically you can't lose as the casino or as the sports book. I mean, on sports book, the household is around 7 to 7.5%. So every time you put $100 down, on average, you're getting about 93 back, and they're keeping that 7, which is interesting because based on the traditional dime lines -110 juice, you should be at a 4.7% hold, but because people bet on parlays and teasers and generally are bad at betting, it's actually about 1.5 times that. So it's kind of an interesting dynamic there. So generally speaking, people are bad at betting on sports, and they don't need that juice, but of course they're going to take it. So it's a fantastic industry to be in. You're selling entertainment effectively, right? I mean, everybody knows what they're getting into when they go to a casino or a racetrack or they bet on a sports game. It's entertainment. If you're just trading a dollar for 93 cents, you wouldn't do it. But you've got the fun of it, and you hope your team wins. You love your team, whatever. It's a good industry to be in, and it's going to continue to print money. So it's not like it can be disrupted like a lot of other industries where maybe the cost of goods goes up, maybe the margins disappear. This is always going to be there. So that's why that, combined with the fact that these sports books are getting a lot more attention. People like betting on sports more and more as, I think people stayed home more. They got that itch, and it's just a good industry to be in. Again, only 19 states right now have it legalized. So you've got 31 that are just waiting, and so you can over double the number of states. And I think that's just definitely bullish for these companies long term. So in my opinion, these are buying opportunities for both of these companies.
Yeah, Landon, this is interesting because in terms of PENN, one of the huge growth drivers has clearly been the Barstool the partial acquisition, or however you want to phrase it, and the launch of Barstool Sportsbook. But there is some allegations towards the leader of that brand, and I'm not going to be an apologist for the brand or the individual, so we're going to set that off to the side. I'll let your data kind of explain that. You said there hasn't been a huge shift in happiness, and for a brand that relies on loyalty, that sounds like an important metric, but we'll set that off to the side for now, and if there's a major change, I'm sure you'll update us on that. But let's talk DraftKings, because I love the stat you just brought about kind of how this is a proven business model. This is something that has been around for a long time, and that's what's always been so intriguing to me about this new kind of wave of sports gaming, because the concept that they're selling is already proven from a business standpoint. They're just trying to acquire customers and then ultimately legalizations down the road, all the while kind of pushing forward this technology and kind of changing the game in many ways for the better for the consumer, making it easier to access these markets in a legal fashion and in a safe way. So, Landon, when you're looking at this from a DraftKings standpoint, we just heard from this company this morning. They basically said, hey, we had some bad luck. So it sounds like even these companies can be in the wrong side of games, and sometimes the public can win. And so with that, that was kind of how they explained away their miss. And so I'm not sure the street's always going to, afford them that kind of explanation, but it happens sometimes. Even the house loses sometimes. But Landon, to your point here on kind of the long-term prospects for these companies, I mean, DraftKings has been kind of the first to market leaders in this space for a long time, and you basically have this company near 52-week lows. Are you guys more bullish one over the other?
Yeah, so first of all, I want to talk really quick about the fact that they said they got unlucky. There's a common misconception in casinos, or not casinos, but sports betting, that the house tries to balance bets 50-50 on each side. That's actually not the case. They try to get the line as correct as possible, and so they can lose if they're incorrect and sharp bettors are more correct than they are. And over time, if they have better algorithms, better prediction, then it's going to balance out, and they may have some ups and downs, but overall they're going to do better than if they try to balance the lines 50-50. So it's completely reasonable to say that they got beat during a short period of time. If you zoom out, it's going to go their way, no doubt about it. Now, I will say that they are more of the pure play for sports betting because PENN has all that other stuff. I think that DraftKings is definitely more the pure play. Their revenues are up 60% year over year. Their monthly active users are up 30% to over 2 million monthly active players, I guess they call them. And their revenue per person is actually up 38% year over year. So not only are they getting more people to download the app and use the app, but they're getting their users to bet more than they were in the past. So this is a great trend for them, and I love the way that they've positioned themselves. So, I absolutely do love where DraftKings is positioned. They are the leader in this, and they're actually they tapped into something that, wasn't there before. It used to be you just wanted to bet on the team plus or minus the spread, money line, total, whatever it was. But now you can bet on individual players. You can, form a team. They can do all kinds of things that no one has done before, and they are the leader in that space. So I definitely like DraftKings long term as well, for sure.
Yeah, this definitely seems kind of like a rising tide lifts all boats situation as legalization and kind of the content around this and the kind of the comfort that now even big brands like ESPN have in talking about this has, I think, really changed the game. But Landon, we got to leave it there. We got to run. Thanks as always. Have a great weekend. The co-founder of LikeFolio.com.